Hey, it's Mike with PriceActionTradingSystem.com, and it's Thursday. It is September 10th. This will be our chart lesson for the day. And real quickly, just to mention, most of you that are members probably are already aware of this, but effective today, I've created a forum on the website. It's for members only, but that is where from this point forward, support questions and trading strategy questions, all that, I will ask you to go into the forum and post those and not send me emails anymore. It's not that I don't want to receive emails or that I don't like answering in that format any longer, but the problem is it's just become too much. I can't. It's not like I can delegate most of these questions because you need somebody that understands the price action and to really give you a good answer. And so it's not like this is something I could delegate to somebody else, but I'm getting a minimum of 100 emails per day that are just pertain to trading questions and chart questions and chart people ask me questions about trades and charts and so forth. And that doesn't include my normal emails and my normal work. So, and literally 100 is a slow day. It's got to be where it's, so by the time a day is over, I'm getting anywhere from 100 to 200 emails a day. I just can't do it anymore. And it's not that I don't want to. It's not that I want to make it harder for anybody, but it's just become a necessity because it's great. Growth, and the website's really exploded. There's a lot of growth. There's a lot of interest in trading. There's a lot of interest in the type of trading we do, which in my opinion is the only kind of trading you'll ever be successful. The only way you're ever going to be successful as a trader is to learn to read this chart. It speaks a language, just like me speaking to you right now in English, or if I wrote you out an email in English, this chart is telling you something, but you got to learn to read it, and it's not easy. It's like learning any foreign language, and it is a skill, so you get better at it. But just understand that the forum is there. If you got questions, that's where you have to go to ask them. I won't take questions by email. Obviously, if you just need a basic support question or a question from me, I'm going to answer those emails like I always have, but I'm not going to answer trading questions via email anymore. I just can't do it, and I hate it. There's good and bad that comes with growth. It's been exciting, it's been fun, but at the same time, it's a little bit more than I can handle any longer. So we'll try the forum, and we'll see how that goes. In the past, I've been adamantly against forums and trading rooms and things like that because of what goes on there. But I'm going to try to manage this one as closely as I can. And as long as I can manage it reasonably and people cooperate reasonably, we'll continue it. But if it becomes a problem, I'm not against banning people. I'm not against shutting it down or anything like that. And I don't, you hate to start off on a negative by saying, hey, I'm going to ban you if you do the wrong thing. But people need to know that we want to keep it orderly. We want to keep it respectful. We don't want profanity there. We want it to be, because we do have traders that are, we have young traders and impressionable minds that follow this. And I don't want if it was one of my kids, I don't want them going somewhere where people are using profanity and throwing out terrible language. So I ask that you not do that in the forum. If you do, you'll probably get a warning first time, and if it happens again, you'll probably get banned. So it's the only way I know to handle it. But anyway, I just want to make you aware the forum is there, and that's going to be our venue for trading questions and trading support going forward. So the email bit is just it's just taking its toll on me and played out, and I just can't. It's just impossible for me to, even if I wanted to do it, I can't. It's impossible. It's just too much work for one person any longer. So, but let's talk about the trades. What looked like was going to start out to be maybe similar to yesterday, and this is what's so great about charts and learning to read a chart, is that what looked like was going to start out to be just like yesterday. The market will do something 2 or 3 days in a row, and then it'll throw you for a loop. But this looked like it was going to kind of spike up and go into a flatter channel, And guess what? The bottom falls out. It just rockets down again. You shouldn't have been caught off guard because you had this two-tiered blue channel here, and we knew we just came off the upside. Of course, we drew the brown one, but you do get a break, and it tries to go higher and fails. And so you would expect prices are just, even at this point, this looks pretty strong, and I'm thinking that's really strong just to be going back to the trend line. But when it shoots right through and gives you a two-legged correction and starts turning down again, immediately look for a measured move. You can see that leg right there. And we basically got a perfect measured move. But also, once we started down from there, the last leg down was this one. And so just see, measure this one, and you can see we pretty much got a measured move down to that point as well right there before. That's probably why we corrected early there. And came back, and we actually got a break of the trend line here. And then this thing continued on down and stayed weak the rest of the day, though. But that's the big picture look at it. And I would also probably go ahead and bring this measurement on down to here. And then bring this here. And this would have been your measured move. And you can see we got exactly to it before we bounced again. We continued to push a little bit lower, but that would have given you a perfect measured move right across there. So if you just move this over, and you can see that's basically a perfect measured move. So use those measured moves because they work and they're very helpful. But let's back out. Let's go through the trades and let's wrap our week up. Remember, no chart lessons on Fridays. Again, people continue to ask me to do little things like maybe just post my chart, mark up the chart and post it. Maybe don't do a video, but I really do not want to go there right now because the whole idea behind me not doing a chart lesson on Fridays is so I can quit early, get a break, and just not be overworked so I don't get burnt out at this. And if I've got to go mark up a chart and do all that, it's still going to take some time out of my day. And what I want to be able to do is come in and trade for a couple of hours, maybe answer a couple of emails, now maybe answer a couple of questions in the forum, and then I want to be out of here by noontime, maybe even by 11 o'clock sometimes. So that's my goal and what I'm trying to do there. So that's the reason. It's not that I don't want to. I know a lot of you want to see the Fridays to compare your stuff to it, but you'll just have to do without one day. And maybe on the forum, now that we have the forum, some other traders will post their chart, somebody that's a little more experienced and that's pretty good at finding at least finding the channels and the trends and the ranges and so forth. And so maybe some of them can post and help you out. And that's the whole idea too behind the forum is hopefully we'll get proper participation, and people won't, the last thing you want is somebody that thinks they know everything and doesn't know anything. And you'll get those people. It's just inevitable. But my goal is to try to keep it reined in and keep it under control, and hopefully we'll have a whole lot more positives than we will negatives. Let's back out and talk about the day. I'm at the back pretty far out here. But really, to this point, we had a slight downward move here, but you can see we finally made a bottom. We made a higher low, and then we were starting up. And of course, you got a little channel working up here. But this looks like a reversal here. Notice you got a little double bottom, first entry, second entry. That's a failed second entry short. I just marked it green simply because you prefer this to be back at the EMA. It's a little risky here. There's early on it, I wasn't sure that maybe, hey, there's not something right up through here as well, or maybe even here. And if that's the case, at the very least, you probably figure we're coming back to test some of these highs up here. So I think you're better off to skip that trade. It's a little bit aggressive, but it is a failed second entry short. So it's a reversal type pattern. I just prefer to see it come back and test off the EMA and not so far up. When you get a little, you can see it didn't go far before it came back again, but the trend line's holding. It's just too bad we don't get another entry here. This would have been a pretty good entry if it had been a good signal bar, and this is just the inside bar here. So no entry there. Running up, and finally you get one here. Again, this is a little far away from the EMA, but there's been no break of this right now, and this is looking relatively strong. But notice that high, and you come back, and you get a first entry, and then you turn down, and you come back and go back out the other side. That's a form of a second entry. It's a little harder to see. It's not real clear, but there's a little bit of a short trap there, and that's not a bad place to enter based on that being the way that's set up. So, of course, then you finally get a pull back to the EMA. You get a second entry long, but look at that signal bar. So no trade there. So just sit tight. And then you make a new low here, and you get a first entry and then a second entry, and that fails right at the EMA. So I like going long there. It's not a very good signal bar, but on a failure, it doesn't matter because it's going to act like a trap most likely. It's still a little aggressive because we do have a break and a new high, but a lot of times you're going to get two legs. So, but because it's a trap, you may take it. But the better trade is to wait, and when it makes this high or low, then you got a lot more information that's probably going higher, and that's the better entry. It's just a little bit aggressive trading that failure right there because you do have a break and a new high, but usually, or shouldn't say usually, but most of the time or a lot of the times, you'll get a break and two legs up, and even this time we got one more little push up before we just continued sideways, and then the bottom fell out. And this, even though this is a sideways channel, it has an upward bias. This thing is pointing up, and the EMA is pointing up slightly, but you can still see that price is swinging back and forth, so you can trade this both ways. If you saw the blue channel, which if you just drew it off the lows and drug it up, it's fitting really nicely, then you probably understand that prices are going to try to come back to this trend line at some time. You know, is this a strong market and we're just going to work straight across to it, or eventually we're going to turn down? Well, we got our answer pretty quickly here. We turned down hard and fast, and this thing didn't even hold, and we took off. So, but you shouldn't have been completely surprised that at some point we turned down to this line. It was a little surprising about how fast it changed gears, but that's the way the markets are, so don't ever get caught off guard. But anyway, we're still undulating back and forth. There's two legs up here, and there's even a second entry short right there, but not a very good signal bar. There's a lower high here, still above the EMA, right into it. Not a great signal bar. You know, you could argue for that one, but just wait, and then you get a failure here, and that's the better place. And you would think we're going all the way down here. We don't. It's still an easy scalp. And then we bounce, and then we get a lower high right here on the second entry short. Notice that low, first entry, and then second entry. And the entry, this is your signal bar. It just sets up the trade. As soon as it closes, put your sell stop right there and wait and see if it breaks lower. Your sell stop goes one tick below that. And people always ask me, for whatever reason, people don't want to include the stems. The stem is part of the bar. So to be able to be considered an entry, it has to break below or above the bar in question, and that includes the stem. I get 25 emails a day asking about the stems. The stems are part of the bar. So in order to get a break below, let's just find one here. In order to get a break below that bar, prices have to break below the very low of it, which is 34.1950. The close is at 34.20 and a quarter, several ticks higher. But in order to get a break below that bar, it has to break below the stem too. So we include the stem. So make sure you understand that. There is a second entry long right here, and being that far away from the EMA, you could take that trade, but you're better off to wait on a higher low. And by the time you get to a higher low, then you're just in this congestion right here. There is another failure right here, and you might have considered taking that, but with that break right there, and then not going higher on the after that failure, I definitely wouldn't enter anything after that. If you entered here, and it just starts going sideways like it did here. This is just, you can see the little trading range. Let me just move this over. So by the time that triggered, you can clearly see that we're kind of in a little trading range. It looks like congestion. Just don't get in that. There was no second entry. Well, actually, you might have got in on the second entry short right there. I wouldn't take that because there's a chance we could still go higher too. So this is just kind of no man's land in the middle, and it's hard to know what prices are doing. You would expect they're going higher, but you don't know that. And if it could break one tick higher and fail and turn down, or could break one tick lower and fail and turn up. And it actually did break lower and turn up, and then it turned down. Now I did mark this one because we pushed lower, came back, and then we pushed lower and outside again. It's still a little congestive there, but you might go short right there. I think you're better off just to wait. If you weren't in here, just wait. And if you were in here, you probably exited by this time anyway. So you just really don't get a good chance to enter this unless you're trying to be real aggressive, and then it might fail on you. And if you're seeing this blue channel, you can see prices bouncing off that. And so that's risky going short right into that. And then of course you run down here and you make one leg up, correction, second leg up. That's two measured legs up. So that's generally going to be the center of the pattern, just like I showed you right there. And I mean, that's a perfect measured move. But that's a nice second entry short, and it actually broke higher and turned and went down. Just go short right there on the second entry. Technically, this isn't the second entry at this level because you got a first and then a second entry here, but no setup. And you got a new low there. So that's technically just a first entry, but hopefully you can clearly see two legs back. And if you went to a little higher level chart, there would be a clear second entry there. So I don't have a problem taking that trade at all. That's a good setup. And after a move down that strong, you would expect another move down. At least another prices to try to make a new low. And that turns out to be a great move. And if you catch that one move, that's all you need today. Then we bounce. I don't think you want to go long in here. There's a first entry, second entry, so it fails, but it's below the EMA. Then there's a third entry, and then there's a fourth entry, and it fails, and you make a new low there. So now you got a first entry, and then you try to go higher, it breaks higher and turns down, so now you got a second entry short right there. And notice you got a break and new high, so that's where you're better off to go short right there on that second entry. And I marked that green just because we just came off two measured legs down, and there's a good chance we're probably going to try to come back and test this trend line. So being that far away from the EMA, because you would have went short one tick below that bar, it broke higher and turned down. I wouldn't wait and go short here because now your signal bar is no good and you're too close to the EMA. It would have worked, but you don't know that in advance. So that's the reason I marked this one green. The only way you could enter it would be on the engulfing bar. And of course it bounces and comes back. There is a second entry long right there. I'd wait on a higher low, and you just don't really get a good opportunity. There's a higher low here, but don't enter there. And now we're just working sideways again. And you actually get a break lower here and a move higher here. And that's really a double bottom. As long as you got enough room to get out, you might go long right there. That's another one. It's not an ideal setup because the trend is down and we're just waiting on prices to get back to the trend line, but you can play that little range. I'll at least make it green, but I just sit tight and wait. Of course it runs up, and notice you made a new low there and you get a first entry, second entry. So you got a second entry short right at the key entry point. Go short right there. And you actually make a lower high right here. again, right at the key entry point. Plus, you get a, notice you made that eye, you came back and you test it once and then twice. So you got a double test right there of that resistance area. Uh, you got a second entry short. What else? Actually, you don't have a second entry short. You just have a double test and a lower high and off the trend line. So the second entry was right here. So both of those are really good setups. And we're running lower here. And you get a first entry. And there is a little second entry short right there. But look at that. You're not back to the key entry point. You're just going sideways with up-down bars. Don't enter in that. Wait for prices to come back to here. And we do actually make a new low. I'd call that a double bottom basically. And then you get a first entry, second entry. But either way, there's congestion. That's a failed break higher. That's technically not the signal bar. This is. But being at that key entry point and this being a failed breakout, you could still take that trade if you wanted. I didn't mark it because it's not the key entry point. I'm just going to get rid of that right there. I don't know why I've got that right there. That's just an inside bar. It's not a signal bar or anything. I don't know why I had that right there. Maybe I thought that broke higher or something. I don't know. Because here's your lower high right here. Prices drop on down. Then you work back first entry. And there's a second entry right there. You could have entered right there as well. There's a little bit of a trend still working back up there. So you could have entered in either one of these really. I think that's what I meant to mark earlier, and I must have put it in the wrong spot. That's what I'm going to assume I did. Probably got distracted. But anyway, notice the new low, and you get a first entry and then a second entry, and then you got a lower high on a double top. So you could take either one of those right at the key entry point. And that, again, that's a very nice move down. Easy runner on that. In fact, you may not even be able to get in right here. If you didn't get in here, you might have missed this one because this one just closes on its low, opens on its very high, the next bar just keeps going. I'm not sure if it would have backed up and filled you there or not. But we run on down and then we're just going sideways again. You definitely don't want to go long. You might take a short here, but you don't really get a good one. You got a real small bar here, but that really is just the first two touches. I'd want to see a third, and then you just can't enter right in there, and you don't want to go long either. So there is a break in new low here, but you want to see some proof we're going higher before you start buying. And notice we got a new low right there. So you get a first entry and then a second entry, bounces right off the key entry point, the EMA, go long right there. And we're just coming off the midline, so you'd expect us to go back to here. And we may even get a break here since we barely pushed over here. We'll either come up short here, which it looked like we were going to do, but it pushes on up. So, but don't go long in here, and you need to be picky on your short. But we do get a break. And there is a close outside a new high here, and that's way away from the EMA. Again, you should wait on your lower high, though. And that comes here. And again, this is almost a repeat pattern. It's very similar to this here. You got to move down, then you come back. So you could technically enter below that bar, but it never breaks lower. It still doesn't break lower till this bar. So you could call either one of those a signal bar if you wanted. Technically, if you called that a signal bar, this would just be an inside bar. So this is really your only setup right here to go short right there. And that's basically just a failed second entry long at the key entry point. And it runs on down. I don't think you want to enter down here. You need prices to come back to the key entry point. And they're not doing that yet. This is actually just a little bit higher right here. Notice we finally get a break. That's a new low, first entry, second entry, and then a lower high right here. There's actually a failed second entry long right here, but you're going short at the very low of the day right there, or at least the very low. Is that the low of the day? Yeah, that's the low of the day. Either way, it's way down there, so you just don't want to go. You just don't want to go short right there at the low of the day, or right there. And here we come back. You get a first entry, and then you get a second entry short right there. It breaks higher, turns down, right at the key entry point. Another nice move down. I don't think now you got a break in a new low, so I wouldn't look at any further entries down here. You know we're probably coming down to the lower side here, or you hope we are. But once you get that break in a new low, every time you enter, it's getting a little dangerous. But anyway, you get a break outside here in a new low, and you get a little double bounce and basically a double bottom right off that low trend channel line. This is really aggressive, but sometimes when you take these at the very, once everything is played out, you've had a break here and way down to a new low. You've got this one going. You've had a break and a new low, and you're way away from the EMA. You know you're overdue to snap back, and you get a setup like this. You might take it because sometimes you'll catch an important low. Doesn't really work out that way. I mean, that's still a pretty nice move up. 20 points doesn't seem like much on a big day like today, but 20 points is a lot. So you may take that, and I draw that trend line right there off those. And really what I did was I drew this trend line off the top and drug it down once it started heading lower. And of course you're working down, you get a first entry, and then you break outside and get a second entry with plenty of room back to the EMA, and now you've got a little triple bottom down there too. So I like that one. Just try to get a scalp, and maybe we're going to head to the other side. Maybe we're going to reverse. And notice that new low, and then you get a first entry there, and then the second entry that fails. That's congested, but it's probably going to trap some shorts. And so when it breaks and goes out the upside, I like jumping on and riding that up. It's not good for anything but a scalp, so that's why you've got to be a little careful with it. And it is congestive, so that's why I made it green. But it still would have worked, but it's not a great setup. But it's just something. With this break, you would expect prices to make a new high. They actually make another leg up, but I don't. And there is a second entry right here, but it's not a very good signal bar. It's just an inside bar as well. So, and that takes us into 2 o'clock. I don't see anything else there that's really worth trading. And we're almost 30 minutes here, so this is a long day. A lot of trades, a lot of price action here. But this is a really relatively strong trend down. So you're not going to be looking for a whole lot of buys in here. Right here you might have, because it still looked like it could be a range day. But once we're working on down, you see I put a couple of them in here. But there's a huge disclaimer that I'd probably stay away from. There's one there that you might take where it makes it triple bottom across there, but other than that, I'd stay away from that. And plus you did have your break and your new low in place. But a lot of times if you get a break and prices continue down like that, you may not get a reversal. Usually you're going to get your 2 legs down in a reversal. So I feel like I'm rushing here, but I'm going to end this because this is 30 minutes and this is a long video, and so I'm going to go ahead and try to wrap it up. But hope you had a good trading day. Hope it was a good week. It was a short week due to the Monday holiday, but we'll be back again Monday. Hey, don't forget today was rollover day. So you'll probably want to roll over tomorrow. I usually wait till the volume rolls over, so that'll either be tomorrow and at the very latest, sometimes it's on Monday, but generally you can roll over on Friday. So be aware of that fact. I got a lot of, I got probably 10 emails a day asking about that, but you don't roll over on rollover day. It's usually the day after or the following Monday. So generally it'll be that Friday. So anyway, I'm going to wrap it up. We'll be back again to do it Monday. I'm done for today and done for this week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.